Why? All right, guys, welcome onto the live. All right, I wanted to start a little bit late, give you guys some time to get going. All right. Now, I know this is something new, so if all of you are not on the live and you're watching this as a replay, it's okay. I know you don't know this is something new, so you'll get used to it over time. All right, but without wasting any time anyway, let's have a look at the dollar index first. All right, now you're probably going to hear my voice in repeat because I forgot to mute myself. Anyway, all right, going forward with what we've got, let me just close a couple of apps and stuff that we don't need. Yeah, so it's been an interesting set of moments here that we've had going on. Let me just do something here. We've had an interesting set of moments happening, and I think that the key thing is that always to be prepared with analysis. If you come to the market and there's nothing for you, just okay, that's how it goes. So with the dollar index, let me start off here with the first part. Now with the dollar index here, I want us to pay attention to a range. Now I want us to map the premium and discount range of price action here. And to do that, I'm going to use the institutional style Fibonacci. Now the reason why I'm going from this low, I'm going to explain this moment here, this reaction right here is the beginning of this very strong uptrend in the dollar strength, okay, from 89 all the way up to 114. All right, so I'm using this as our range to map out price action because this is going to be our key range to operate with now. Right now, if you've watched the 4-part court series or the course, you know what I'm talking about off the bat. If you don't know what I'm talking about, that's okay. But nonetheless, what we have had in terms of price action is that the price has come back to equilibrium. So right now we're at what we call fair market value, right? This is the midpoint of price. This is the fair value of price. Okay, if you go down below 50% in a bullish trend, the lower the price is, the more of a discount you've got. All right, the higher the price is above, the more of a premium you bought it at. But the 50% is just kind of like the sweet spot, right? The middle fair ground price. All right, now what's supporting price staying in this random area? Apart from that, the fact that this is the equilibrium range, there's another thing that's important here is this supply zone. This is a very important supply zone. And when I do map it, it would add a bit of understanding to why the price is just hanging seemingly in the middle of nowhere. All right. So on the monthly supply zone here, we have this area here that was previously used for supply. And not just for 1 year, it was used as supply for 5 years until the price broke above here. And this is April 2022. We've had a break above this area, right? And then we've had a return back down to this area. So the reaction we're having here now, whenever the market does that, what happens is that this supply zone, it actually becomes what I call the flip zone, okay? Supply zone, okay? Flip zone. So what that means is that where price would have used this area as supply, now it's using it as a demand zone. So it's not a demand zone, but the price range has become an area for buying instead of for selling, okay? The zone has been flipped, which is the term flip zone, right? So now that you've got this under wraps, let's look at the price in deeper detail. So we have here now, if I skip over to the daily, unfortunately, this is not like trading view. And what I might start doing, I think I probably will start to use trading view because it seems to work out a bit better. So I think from now on, I'm making a decision to switch to trading view. So I'm actually going to do that now. Let me go to trading view and do this here so that you guys can actually have a bit more detail. I think trading view is probably one of the most important tools in the trading space right now. And if you don't use it, get using it. All right. Now I probably have dollar index markings on my trading view situation anyway, but it's such a great interface. I think is a user-friendly and visually nice to look at compared to MetaTrader. So I'm going to stop using MetaTrader for a little while. I'll use it sometimes, but I guess for the future, it's better to just use TradingView and work from that angle. So I'm going to open up the US dollar index on here. Let me see. Let's just open that here. All right. So using the dollar index from here, let's switch over and let me load up the chart. All right. So see the charts here. So the dollar index, again, is a study that I want everybody to do. There are other studies to do of, now, when I look at the dollar index, what I'm doing is I'm looking at multiple markets to derive a decision for one market because they're related, okay? Now, in the spectrum of Forex trading and stuff, I would say the Forex industry or the Forex market is related to every other market, and it's for one simple reason. Is the market of money. When we're looking at the price, we're looking at one currency strength compared to another. All right, this is different from the stock market. Now, I guess there are some correlations you may be able to find between the stock market, for example, and let's put this on the monthly here, between the stock market and Forex, but it's going to be very weak. The closer you get to the money in terms of like real money markets, like for example, futures, okay, the bond market, the debt market, those markets are a lot more closely related. Now, the dollar index, even though it's an index, it basically outlines the strength of the dollar compared to, major currencies around the world, okay? So when the dollar index is generally going up in strength, you can figure out that the dollar strength is most likely going to increase, which means for something like Forex, Euro USD, you should be looking for a sell, all right? So that's as simple as it gets. So let's do the same analysis again, and then after we'll be able to kind of figure out what's going on, all right? Now, there's two ways we can do this. If I was to drag this out here and just widen these a bit so you can get the candlesticks going, there you go. We can have a look at the price action from this standpoint, right? There's a lot of information. The price actually goes all the way back to 1970 pretty cleanly, and you can actually look at price action from that range or that standpoint. Okay, but we're not going to do that for now. Now it's just time to focus on where we are in this market. So coming back anyway, all right, let's do this here. So from this standpoint here, let's do the same Fibonacci. Now my Fibonacci is already set up to look at price. So I'm going to take the same high and low I just got. And let's just lay this out over here. All right. All right. Now my Fibonacci is in blue. Some people have different colors, but I just like to use the blue. I think it's easier on the eyes as well. All right. And let's put that over here. Now, so the equilibrium point is right over here. The same supply zone that we're looking at is in this range here. So let me put this out. All right. This is the supply zone range over here. And I'll change the color so that you guys can see this a bit more nicely. Let's put some settings on there. Let's change it to, let's try to go for this and see. Yeah, all right. I'll just put this box out here. So this is where the price is at the moment. Now, of course, when I go over to the D1 here, I'm going to map over what I'm looking at. Okay. So on the D1, we know we're on the equilibrium point right here. In fact, what I'll do just to keep a track of where equilibrium is, I'm just going to put a straight line here. All right, so let's just get a horizontal line. Equilibrium, the 50% level is right here. All right, so just remember that. And let's go over to the daily. So now, all right, I'm on the daily time frame. And let's have a look at this. So if we look at the price here, let's zoom in as much as we can. Really get these candlesticks to show a bit. Let's see what we've had. So there's a few things that the price has done. All right, we had this major short, and I did tell you guys about the short before it happened, which was starting up from this range here. All right, we had really good price action. Now over here, and this is my point, all right, over here we have an order block. Okay, this is a demand order block to the left of us here. Now this demand order block that we've got going on over here, the price is broken cleanly beneath it, right? So I'll just put this here. I'll put some writing as well. So let's go for the border to be, I'll keep the border, and let's go for the fill. The background to be the same here for now. All right. So if I put some text over here, let me write this out over here. So this is a D1 demand order block, okay? For sure. Let's find a color that's good enough to work. All right, so we have a D1 demand order block over here. Now, what the price has done is that now the price has broken beneath it very cleanly and come to the other side. What we've got going on right now, and maybe I'll move this out of the way so that it's somewhere here. Yep. So this order block range that the price is in right now, we've broken beneath this area. The price has come to the equilibrium point and started to move off. Now it's filled off this gap right here that the market left here. So the close of this candle, the open of the next, there's a gap here. The price has filled that out, right? Okay, but then we have what I call a validation point, which is when the price closes beneath has to be the same color candle in this case. And let's just go for something that stands out and make it fit. Yep. So over here, we have a validation point, or in essence, this is also what some will call a fair value gap, right? So I'll put this here. So I'm going to call this a validation point, VP. Now, because we're on the D1 time frame, I'll call it a D1 validation point. All right. Let's just get another color. Let me see if I can get this here. All right. So if I do this here, so this is a D1 VP / an F fair value gap. All right. At the same time. All right. Up here. Now that the price has done that, now I really don't like this font. Let me see if I can actually change the font to something better. If it will allow me to put the block here. All right. Now, it won't let me change the font here, but I'll probably change the font later on in the settings. All right. So this is that. So we have this, probably not the most visible. So let's try something that pops out at you. Let's try that. All right. Here we go. So this is a D1 validation point of fair value gap. And the price is about to close in on this fair value gap. There's really hardly any pips left to fill in right here. Now, what I think the price is actually really going to do is, I'm going to take this to the weekly to explain. On a weekly time frame, we have an order block and we still have a bit of a liquidity void that hasn't been filled out until this order block at 101. So if I go over here, I'm going to draw this out. My expectations is that we need the price to get back into this order block before we see any long activity, which I know we'll have. Now, on my other charts I showed you, and I'm sure it's probably on here too, that there is a liquidity gap. And I just want to show it for reference here. I have to go to the 15 minutes to find it. And I'm going to have to scroll back a little bit to get it. It will be in the 103 range. Let me just double check where it is. Let's double check that. Yeah, here we go. So in the 103 range now, over here on the 13th, it has the gap here that has been filled out. But on not every chart, the gap has been filled. Now, I have another chart here on another time frame. There is another gap, and I will find it later on. But we have a gap at 103 that hasn't been filled out yet. Okay, a pretty small gap, but it needs to be filled out. But we'll figure out where that is in a moment. I can't see it right now, but to save time, it may be this one, but there is another gap to be filled out, something similar. Or maybe on this chart, the price did actually fill the gap out and is the same one I was looking at. But on my charts anyway, and some others, the liquidity gap is not being filled. All right. So going back to the daily time frame anyway. All right. So on the daily time frame here, the price is, for me, I want to see the price react over here and actually come back to this order block here. And then we can go for a long. Now, looking at some of the pairs that I've seen on the Forex side of things, it looks like they do have, even though stuff like AUD, USD and stuff have been reversing, for me, the price action here is we need a price to pull back down around about here. Once the price actually does that, then we can make use of the price action, you know, moving further for a long. Okay, this is what I'm looking for the order block, because then it will close this gap, right? The price will be efficient all the way down, but it'll start to fill out these gaps, because we have a gap here, for example, right now, just above, I'll say just below 103, literally 6 micro points beneath $103. And there's a gap here between the close of this candle and the open of the next that needs to be filled out. All right, we also have liquidity voids that have to be filled out too, right? And we have more gaps on the upside, 104. All right, so for me, I do expect the dollar index to continue pushing for a long. but we got to wait to see what's happening in there. Now, the price hasn't touched this area yet. It hasn't closed in on the gap, but it's very close to. Once this gap is filled out, I do think today probably there isn't much US dollar news. So we might have a bit more of a long day or a recovery day, if you want to call it that. But tomorrow, I do expect to see, now my reaction I would like to see would be a wick close above the high. So some sort of stop on kind of situation. And then from there, the price gives us a sell, all right, at least to this 101.6 area. Now, I want to show you kind of what pairs I'm looking at, and then we can take a look to see how that correlates. Now, I'm going to start with USD CAD because I've been looking at the USD CAD pair and I really do like it. Let me use ICE. It's my favorite one to use. Okay, and I don't have any markings on that, which is pretty good. Now, I'm going to start again from the weekly, and I want to frame the range that I'm looking at. So get the 1 week time frame up here, and let's have a look. Okay, maybe I'll zoom out a little bit so you can see where I'm looking at. Now, with USD CAD, if you want information about it further along, you can do. If I go to the monthly here, and we started from there, you can get price information for USD CAD all the way back to 1971. All right. But the main frame, if I was to frame this, okay, the overall bias and direction of USD CAD is bearish. All right. Taking the higher swing to the lower swing over here. All right. At the moment, the price is still in discount for selling. So still in the good areas for selling. All right. The equilibrium point in this case right here. I think what I'll do is I'm going to change the description of the Fibonacci to say equilibrium so that it helps. Some of it to be confusing. So EQ. All right. So EQ coordinates. Let's see if I can do this. Let me just change this description for you guys to see this. So settings quickly, style. Now, I don't know, this blue, I wish I could get something a little bit more popping. I don't want to go for red. Let me try and see what happens if I do orange. It's probably going to look crazy. Let's go for softer orange. All right. And then after we can go here, use one color. All right. So labels, left, middle and stuff. All right. So obviously, if I do that, it's going to mess up everything. All right, let's just leave it for now. I'll fix it afterwards because I'm getting distracted already. And I put the 50%, I need to put this back. So let me put this back. 0.5, 0.9. And yeah, all right, I'll just leave it as it is for now. We'll deal with it after, okay? Press okay, but at least I've got this orange line here, which is something I can use to control. Anyway, so the equilibrium price point here again is here, right? This is a key. So the equilibrium price range over here is where the price is right now. Now, I don't know what just happened to my Fibonacci, but it doesn't matter, okay? Now, for me, keep this equilibrium point in mind, and I'm going to show you why I'm looking for this sell on the dollar index. So on the dollar index here, the equilibrium order block is right over here. Now, what we do have, okay, and I'll put this over here. What we do have over here is we do have the fair value gap, okay, or the validation point on the weekly filled out perfectly, right? Now, the price didn't return to the order block beneath, okay, before going for a long, but it did return over there, right? So you can keep that in mind. And I'm going to draw this out over here so you can see this, right? Now, the order block over here, the problem is that when the price does this, this still isn't efficient because we need demand liquidity for the price to be able to go for a long. So it doesn't have to be filled now, but there is going to have to be a moment the price will have to get into this order block, right? Even though we've got this fair value gap and that price did take off long. Now, my focus really isn't there because after that, we have efficient price action. So the efficiencies we have here, the dollar index USD CAD may not have to go back down here for a bit and continue to go for a long that I believe it should have. Now, my focus is at this order block range over here. And my range of focus is from the last major push or bullish strong push in price. Now, out of all of these bullish movements we've had from 2021, this is actually the largest bullish trend that we've had. So this is what you would suggest as an impulse move or massive, large swing. So if I do that and I draw out the Fibonacci here, what do we get? So I'm just draw this out over here. Now the price is closed below the 50% level already. Now we've closed beneath 62, and the price is currently hanging at the optimal trade entry, which is the OTE level right here. Okay, let's drag this out a bit. All right, just see if this can be a bit lighter for you guys. Let's try just do this here. I'll just try a brighter color to see if that would help to make it a bit more visually pleasing. Okay, I guess that can work for now. It's not the best, but we'll figure it out. So anyway, with the prices come back here to equilibrium, close beneath that, gone to 62, close beneath that, got to 75 and close beneath that. Now, I think the price is really trying to fill out this liquidity void. And my idea for the reason why the price would want to do something like that, let me just take the background down. There you go. All right, a little bit better. Now, my thing is that we have one more level left, or two, 78.9 and 86. The key thing to notice here is that any fair value gap that was here has been closed, but there's still a little bit of a liquidity void left from this candle. Now, because I know the dollar index will most likely push for a short, it falls in line pretty well with USD CAD also doing the same thing. Now, for USD CAD to go for a short, it doesn't really need that much because it's pretty bearish. This weekly candle here, this demand zone area here, as long as the price can return to the other side, there will be liquidity for the price to sell on. And so what I'm looking for with USD CAD is something similar to what I was just saying about the other pair. So something like pull back in here. And this is not drawn to scale, but just something along the lines of this, and then a return back down here. I want to see the price return to this order block, because then we would have had the price return to this, the initiator of this bullish trend, and we can see the price pushing forward. Now, I know USD CAD has to go for a long. There are lots of inefficiencies on the upside. I won't be able to go through them all, but there's things like gaps and etc. that the price hasn't actually been able to fill out. So, with that in mind, I do expect the price to sooner or later push for a long after this initial bearish movement here. So let's put this here. I'm trying to find the right color that can work. If you guys know good colors that can work, tell me. I'll find this a good color that can work. But for now, anyway, this is what I see with USD CAD, at least to get into this order block. Now, going to the daily time frame, how would that work? What would that look like? Well, I'm going to keep the same time frame structure here. But what I'm going to do is that with that weekly zone, which is this whole range, I'm going to cage it down to the daily demand zone area, which is here. And settings, do this, the background, just make it like a blue or something. The background is also, actually, let's put it like this, and then make the background similar. So hopefully that should be a bit better for everyone to see. Yeah, all right. So this area here, right? This weekly zone that I had drawn out before is now being caged down to the daily. And this is the demand zone area here. You can see we have a lot of touches inside of this area until this breakdown here. And now we've had this breakdown here. We just need the price to return in here. Now, looking at the price signature, I don't think this is enough today for the price to just return in here. We need what I would call a stop hunt, okay? But as a reaction above today's high. So my thing is that even if the price can reach a little bit further along and even stop off over here and fill out this area of liquidity void, then it'll make more sense even from here if we have a reaction where the price tomorrow takes the high of the previous day, which is today's high. That would be a great trigger for a sell as a continuation, and to go for a short. That would be one way the price can do it, right? And it just depends on the strength of the dollar at that time, on how fast and hard the dollar index falls as well. The other option here is we have a really nice order block resting just right here, not really that large. Price efficiently came to supply and dropped down here. So if the price was as a second option to get right here and pull back even higher right to this area here, if the price does that, then what we would get, and I'm just going to put this here, is a fantastic short also back into this area. So this is what I'm watching for. Now, USD CAD doesn't exactly follow the same structure as other pairs do. All right. And this is a key here. The price doesn't follow the structure like every other pair does. So we know that it may actually do more or less pips than other US dollar pairs. So USD CAD may do, another 100 or so pips maybe, whilst the others wouldn't do that. And it's really about what happens on the day. Now, to my knowledge, there isn't any Canadian dollar news. There is US dollar news in terms of speeches that might do something to the price. But from my knowledge, there isn't any Canadian dollar news of high impact. But of course, I'll always check again and we can take a look at it now. So USD CAD is a setup that I'm looking for. It hasn't done what I want just yet, so I'm not reacting as of yet, because I want the price to obviously show its hands first before I make any sudden movements with the price action. But until then, USD CAD is going to be a fantastic pair that we can take some opportunity from, right? So that's that. The other pair I'm looking at is, I do like how AUD USD has been moving, and I wanted to go through with you guys as well. I may have markings on it. If I don't, that's fine. We can start off from the monthly range and just kind of map out what's going on. Now, from the monthly range, I'm not going to go through the whole entire span of what the Australian dollar is doing, but I would say that I do expect the price to give us some pretty good analysis moving forward. Okay. So let's do this here. So on the monthly time frame, I still expect AUD USD to go for a short. And if you don't know the reason why, I'll just quickly go through it again. See if I can zoom out quickly. All right, now I do know AUD USD in the long term, and I can zoom out to show this as well. Let's see. Let's go here. Now, from 1972 moving forward, AUD USD is bearish. Starting from the 2000 and let's go from here, the 2001 swing here. All right, if we trace the price action, we've actually had quite optimal trade entry. Now, if you want to frame it for the whole thing, which would be fun to do, we can actually do it from the last price feed or the highest swing. If we go from this range right here, then where the price has last left off for us, okay, since the price has dropped down from top to bottom, and I'll just put this here. And I'll take the top up here. Bring this a bit closer so we can actually see it. So if we take where the price is now, so if we frame this market, okay, from the complete price feed we have, where AUD USD is currently trading is deeply in a premium. All right, so right now selling is in a deep premium, which means it probably won't last for long. And this is obviously over, this is 72 all the way to 2023. So we're talking about 51 years. So 50 years of price action. If you want to talk about the long-term scale of things, it looks like AUD USD is very bearish, but okay, the price has been operating below the 50% level here from 1983. And it's crazy if you map this out, you can even see things that show you how accurate this is. Look at this movement here. The 2008 financial crash, look at where the price spiked to exactly at the 50% level before crashing down here. It's almost scary how manipulated the market is, okay? Because they brought the price just back to fair market value and then everybody sold off. All right, this is absolutely crazy. Absolutely crazy. Absolutely crazy, in fact. But anyway, before I stay on there for too long, let me come back to my senses, right? So this is that price action here. So we've been operating at equilibrium for a while. The price managed to break into the 62, so discount area for a while before selling off again. And so far for the last 10 to 12 years, we've been basically in discount, right? So, in premium for selling. So AUD USD does have some bearishness left on it, but not that much before it's time for it to go for a long. So we could say that for another, 5 to 10 years, maybe there should be a swing, at least the price to make an attempt to come back to the fair market value of equilibrium here, and maybe push even higher. Okay, which is what I'm looking for. Yeah. So moving forward from there, if I go over to the weekly here, let's zoom that back up. On the weekly time frame, when the market made this low, and I just need to actually probably go back to the monthly here for you to see. When the market made this low, there's a few things we're going to map out here. I'm going to take this area here. All right. And then we've got the trend line over here. All right. So the 2020 low, this is 2020's candle. The price, all it did is use the event of the news to fill out this unfulfilled deficiency that was around for about 9 years. When the market hit that equilibrium point on the wider range scale and then dropped back down here, the price didn't return here before taking off to move further for a long. So that was inefficient price action here. 2020 was an opportunity for the market to find a reason to get back down here, and they pushed the price straight back down into this demand order block here. Now, unfortunately, I did expect AUD/USD to move higher because I've been watching the price action of AUD/USD for a long time. Now, what we did have is that once the price, this is the first swing high before the 2020 news, right? Then this is let's put that here. This is the highest point we've had since the price went into this demand zone to fulfill efficiency. And unfortunately, all right, we have what is called a failure swing, or lack of sign of strength on the bullish side. In this case, the price wasn't even able to close even with the wick above this previous swing high, which means that there's still bearishness in this market. And from that standpoint, even though the price on AUD/USD is giving bullish shines, from this perspective here on the monthly, there's still room for the price to sell off more, even below this order block. And most likely what price will probably do in this case, in my view, as I've said before, is to pull back down to this area, maybe come beneath this low, but we'll close with the body of the candle instead of with the wick. All right, that's kind of my expectation. So one more kind of pull down to 55. Yeah. Now, after this, let's go to the daily now, and let's frame the price. So knowing that, my mind is still on the bearish side of the market. We've had a pretty good run so far. If I go over to AUD/USD to what the price has done, all right, from Friday's price action here into Monday, we've had a nice swing over the weekend. We have a daily order block here. All right, we've had a reaction here for a short. All right, I call it a stop hunt. Let me just make this thinner. All right. So this is the daily order block here. Let's draw this out. And the price is giving us a sharp drop. We've had 3 days of selling from Friday. And now the question is where's the price aiming to go? Well, the first kind of point that the price is at right now, which is of my interest, is here. And now bearing in mind, of course, the dollar index is going to go bearish one more time at least. That's the expectation. If it actually does play out in that way, then there could be a long going forward. But I would say what I would call first base right now. First base right now to know what price is going to do with AUD/USD is right here. This supply zone, the highest up supply zone price, and it's the strongest out of the set here because the price used this area to go for a sell before breaking above and coming to the other side. Now that it's come to the other side like this and the price is taking out some lows, the question is that since the price has dropped like this, will it continue? Now, if there's a daily close beneath this area, then I'm going to be more convinced of a short for a bit longer. Reason being is because, again, on the daily, we still have these kind of fair value gaps over here, which is our D1 validation points, right? And then we have another area here, another flip zone of supply down right here, an intermediate one as the price is going short. The price is broken above and, not returned to it just as of yet. Let's put this out. So if you put all of these things together here, all right, the price has a few places that it can go, and it would depend. Now, the Australian dollar seems to be pretty weak at the moment, and so is the New Zealand dollar. So even if the dollar index pushes short, we may not get that much of an effect. But what I would say is that I am watching this area here. Now, tomorrow, If the market opens up, taking the low of today, wherever that ends up, let's just say the low of today is here, then actually what I would look for AUD/USD would be for the price to return back up, at least here, to give me some targets for a buy. And if it breaks above this area of supply, then of course I'll continue to take buys all the way up until the final target. Now, what do I mean by the final target? Now, for me with AUD/USD, okay, there's one more supply zone left in the major scale of things, which we had a massive drop from. Now, the trigger was the February Fed news, interest rate news. And what the price simply did was just give us like a textbook reaction over here, right? Now, I don't have my period separators on, so it doesn't really make much sense what the price is doing. All right, if I go over to the weekly here, we can have a look at that. So what the price did here was take a high, it's not a previous year high, but it's just a significant high. And what it did is fill out unfulfilled efficiency of supply, which was up here. This is it. So the wick of the candle went into this area. And then from there, we had some selling. That was the trigger. Now, I did leave some liquidity void on the way going down from that, which is why I'm contemplating on whether the price will go long further or not. But now, because that price has formed this swing here, we can actually use a Fibonacci intermediately within the bigger one and just take a look at where the price is operating from. So right now, from high to low, if we take the swing from high to low, okay, the price stopped off at the 62 level and has dropped down beneath the 50% level and has ended up here. So we've gone from discount into premium for selling, right? But it will be in the sense of discount for buying, okay? Whenever if it's a premium for selling, it's a discount for buying and vice versa, all right? Now, the 86, the extreme levels up here, 78.9 and 7, the OTE level rest in this range right here. To me, there's still a fair value gap that has been left over here that the market would need to fill out. And the thing is that one thing about the market, it doesn't have to fill out things straight away. And I want to say this, I mean, I know that there's a lot of people who trade a trend of type of style of trading called SMC, smart money concepts. And you have to understand that the algorithm of the market, as much as I love smart money concepts, I think it's fantastic the work that the founder of it has coined. I would say if everyone's trading the same way, the algorithm of the market will definitely change its stripes and actually start to create variations of this. So what do I mean? Maybe not fill the fair value gap right now, but delay it for much longer, or do some overshoots, or where we have what will be called a turtle soup, do 2 of them. Things like that, anywhere that they can actually manipulate traders. I've seen a few moments and I've gone through the analysis at least 10 times to see if I was wrong or not, even though I didn't take the trade, where there were moments in the market. I gave an example, I believe, of EuroCAD to everyone, where the market was supposed to actually fill out or do a specific move that would have been in line with smart money concepts to the T. It did everything else but left that part, which means one thing: manipulation. Okay, the market is already upgrading itself and is able to do that because of something called complex linear regression or machine learning, which is the ability to learn the patterns of traders. So my thing I always say to you is that whenever you're trading, okay, and looking at the market, still keep the concepts, but always be aware of anything you see of changes. Now, stick to the strategy doesn't mean you change the strategy, but be aware and nimble to adjust when you need to adjust, okay? Because that can definitely happen, and I'm seeing it happening a bit more in the markets, right? But anyway, this is my idea for AUD/USD. All right, I expect the price to do something like this pretty soon. And once the price does that, then we can, if it stays around this area and goes off for a long, if the price comes back to the 62 area again, at that point, most likely it will break above and continue. However, if it breaks down and continues to this next area here, then we're going to be in an area of premium pricing for selling. So I'll be intrigued to know what the price actually does with that. All right. Now, today, I don't think is the best day to kind of get into these trades. Friday was a good re-entry moment, okay, for that pullback that's happening now. But I know that once I see the dollar index, which is my key here, when the dollar index starts to show any signs of bearishness with clear evidence, then I'll be changing the direction of all of these trades. But AUD, USD, and USD CAD are my favorite. Now, I don't see any suggestions from you guys, so of course we'll continue tomorrow. But this is going to be the new regime. So every single day, guys, I'll be on for 30 or 45 minutes, and I'll be going live on different pairs. I'm going to stick to using TradingView because I like it a lot. And yeah, I'll see you guys tomorrow. Everyone take care.